All right, today we're diving deep into a platform that absolutely turned the NFT world on its head, Blur. This whole breakdown is based on research from BGVC, and we're going to unpack exactly how Blur built a financial juggernaut for the pros.
Really, it all comes down to this one question. I mean, what happens when you take the ruthless, high-speed logic of finance and you just unleash it on the kind of chaotic, creative world of NFTs? Well, the answer is Blur. And believe me, it changed everything. Okay, so let's set the scene. To really get Blur's impact, you have to remember what the market looked like back in October 2022. It was basically a one-horse town, and that horse was OpenSea. A great platform, but one built for a totally different kind of person. This slide just lays out the core problem perfectly. The entire market was built for collectors, people who were just casually browsing, looking for cool art. But the real money, the actual volume, was being pushed by professional traders. And these guys needed speed, they needed advanced tools, and they were getting crushed by fees. It's like they were trying to race Formula One cars, but they were stuck on a go-kart track. It just wasn't working. So what did Blur do? Did they just build a slightly better go-kart track? No way. They completely ripped up the blueprint and engineered a high-performance financial machine from the ground up, built specifically for those professional racers. And this analogy just nails their vision. They weren't building another art gallery. They were building something like a Bloomberg Terminal, for all the high-speed data and analytics. And they mashed it up with the deep liquidity you'd find at a massive exchange like the CME. This was a pro-grade hub for NFT finance.
So let's look at what this thing could actually do. First, it's an aggregator, so it pulls in listings from everywhere, guaranteeing you the best price. It lets you sweep the floor, buying up tons of NFTs at once, and it's 10 times faster than anyone else. It's got the real-time analytics that pros live and die by, and, crucially, it introduced these pro bidding tools that let traders act like real market makers, setting the price for entire collections.
But look, a fast trading screen is only half the picture. The real revolution, the financial game changer, was happening in the engine room. And it was a protocol they built called Blend. This is where Blur went from being a marketplace to a financial ecosystem. See, before Blend, your NFT was just a static picture. If you needed cash, your only option was to sell it. Blend created a way to unlock the billions of dollars that were just trapped in these JPEGs, turning them into active, productive financial assets. So how on earth did they do this without risky things like price oracles or loan expirations? Well, the magic is in this auction system you see right here. It's actually genius. If a lender wants their money back, they start an auction. The interest rate starts at 0 and just slowly ticks up. The first new lender who says, yep, that rate looks good to me, takes over the loan. So as long as someone in the world is willing to lend, the loan can basically last forever. Okay, so Blur builds this absolute monster of a platform. But how do you get everyone to actually use it? You don't buy a Super Bowl ad. No. You launch a calculated, crypto-native economic assault on the king, OpenSea. They used a classic crypto strategy called a vampire attack, and it's exactly what it sounds like. The whole point is to use your own token as a weapon, as bait, to suck the lifeblood, the users, the liquidity, the money, right out of your biggest competitor and bring it over to your platform. And was it effective? Oh my goodness, just look at this chart. It tells the whole story. Blur's airdrops plus their 0% trading fees acted like a giant financial magnet. At its peak, Blur was gobbling up over 80% of the daily trading volume, pulling it straight away from OpenSea. It was brutal. And the fuel for this entire war was, of course, the Blur token. The tokenomics were practically designed for an attack like this. As you can see, a massive 51% of the entire supply was earmarked for the community. That was the war chest they used to reward people for listing, for bidding, and for staying loyal. But this hyper-aggressive strategy, this growth at all costs model, it created a huge glaring problem right at the center of their business. It raised this massive question about whether they could actually survive long-term. So check this out. In a single month back in 2023, Blur processed an incredible $135 million in trading volume. I mean, a totally dominant number. And in that same month, you know how much revenue the protocol itself earned? A big, fat 0. Nothing. Because their main weapon, that 0% fee model, meant they had no income. They were just burning through tokens to pay for growth, and that's just not a sustainable business. And this led to the big debate around Blur. Was all this volume real? Was it organic activity from traders who just loved the product? Or was it just airdrop farmers, artificially pumping up numbers to get as many free tokens as they could? The big fear was the second the rewards stop, the users vanish.
This data here just captures the state of the war perfectly at the time. You had Blur, the undisputed king of high-dollar volume. But then you had OpenSea, still commanding a way bigger army of actual users every month. It's like you had two different kings ruling two very different kingdoms.
So, how do you solve a zero revenue problem without giving up the 0% fee advantage that made you successful in the first place? Well, this is where Blur played a checkmate move. They decided to pivot from being just an app to becoming an entire ecosystem powered by their very own blockchain called Blast.
And this was the masterstroke. By building their own Layer 2 network, the Blur ecosystem could finally make real, sustainable money from transaction fees, the gas fees that users pay. And that income allows them to keep the 0% fee on their NFT marketplace forever. It turned their biggest weakness into an unbeatable competitive moat.
And that leaves us with one final, absolutely massive question. The financial machine that Blur built, especially that blend protocol for lending without oracles, it's way too powerful to be used just for JPEGs. So you have to ask, could this be the blueprint for tokenizing everything? Could this be the system that brings trillions of dollars of real-world assets from real estate to private company stock onto the blockchain? Now that is the multi-trillion-dollar question that Blur's innovation has put on the table.